All right, so yesterday the FOMC minutes basically came out, and I think that, of course, you're probably going to be watching this video on Saturday anyway, or anything after Saturday, because I'm going to be uploading then. But okay, so I think it's quite evident that we already know that a 75 basis point is here, because, of course, from the FOMC, Jerome Powell basically already went through with us that it's going to be a 75 basis point increment. Okay, so, but according to this minutes, and of course the statement itself, according to the participants themselves, they're expecting a 50 basis point increment in September's FOMC. So that's pretty huge, okay? Because if we're expecting a 50 basis point increment in September, it simply means that there won't be a pause or a rates cut. Okay, a lot of people, they're going to be pausing because inflation is going to be going down. Oh, we got 0%, so we could have a rates cut. No, it's not going to be happening. I know for a fact that that's not going to be happening. Okay, because unless if September's CPI comes in to be like negative 2% or something ridiculous, it's not going to be happening. Okay, I don't think that they have to do so, and there will be more supporting evidence later after this in the statement as well, and then I'm going to be going through them as well. Okay, and of course this also implies that the Feds are also projecting for a peak 3.4% FFR, which is from their previous SEP, which is the summary of economic projections. Okay, so they are talking about how they think that bringing the inflation down 2% and being restrictive to keep the inflation low. That's one of their most important things that they want to do. Okay, so if they want to actually bring inflation down to below 2% and actually keep it there to ensure that it stays restrictive below 2%, in order for them to actually bring it down to about 2%, right now they actually have to increase rates, okay, which is what they're actually doing to begin with. They have been doing 75, 75, 75, and they are going to be including 50, 25, 50, 25, so whatever it is, okay? I do think that they have to be a little bit more restrictive on the rates hike. They need to hike it a lot more in order for us to bring down the inflation rate. Okay, of course, they have to kind of artificially push the inflation level down. Okay, but in order for them to do so, it simply means that we are not going to be seeing any sort of pause or any sort of rate cuts. Okay, simply because we have to know that all this quantitative tightening, or this QT, actually comes in, and they are actually more of a lagging. Well, I won't really call them an indicator, but they have a lagging consequences. Okay, this whatever that we're actually seeing, the 0% inflation that we actually saw, the 0% inflation month over month that we saw in the previous CPI, that actually basically came about. It's due to July's CPI, but I would expect that this was the results of what happened back in about February and March, where they start to tighten. Okay, and now we're starting to see the results of it. Okay, so it's a lot more lagging than we actually think it is. And because of that, in order for them to bring the inflation down to 2% and actually keep it below 2%, I don't see any sort of pauses or any sort of cuts coming anytime soon. And of course, the panelists also talked about how, they are seeing commodities drop in price as well, which also then again comes down to the fact that, okay, honestly, let's be honest, we all know for a fact that commodities are a huge contributor of why the inflation is actually going downwards as well. Okay, you look at your copper prices, you look at your aluminum prices, you look at all the other commodity prices, all of them are actually going down. Okay, so if that's the case, we would also have the same level of concern that this commodity crisis can easily come back, and our whole supply chain will be affected all over again. So the risk of a persisting inflation would still come back soon, because if right now commodity prices are a huge contributor to why inflation is going down, then of course commodity prices will also be a huge contributor of why inflation is coming back. All right, so the committee also talked about how about the risk to the inflation projections being skewed to the upside, and the possibility that inflation expectation would become unanchored, and that risk will trigger supply conditions to be even more affected. So of course, personally, I do think that all this sort of risk is slightly lowered on simply because I think that companies in general right now, they are really putting in a lot of effort and a lot of money in order for them to bring the supply side up. Okay, if you look at your consumer staples, you look at your Walmart, you look at Target, you look at Costco, all of them are basically saying that, oh, our supplies are actually pretty good. If anything, it's a lot higher than in 2021. Right now, the supplies are about like 36 to 40% or so, which is a lot higher than expected, because previously we were like dangerously low at about like 4% to 10% or so. Okay, so right now we are about like 36 to 40% from yesterday's target earnings, we got about 36% in terms of the inventory. So pretty good on those numbers. Okay, and because of that, right now our inventory are slightly on the higher side as compared to the demand, because demand is of course going to be slightly lower right now. So I do think that if we are talking about having a heavy supply chain issues, I don't think that's the biggest risk that I would have for my own concern. Okay, afterwards, then the participants basically noted that with the below trend GDP growth helps to reduce inflationary pressure to set the stage for a sustained achievement for the Fed's objective for max employment and price stability. They also suggested that the economic activity may be stronger than implied by the GDP data, such as the labor market statistic. So some of the participants raised the possibility that the discrepancy might be resolved by GDP being revised upwards. All right, so this is pretty political, charged in every single point possible, because before the GDP data even came out, okay, we were all talking about how we're definitely going to be in a recession. But before the GDP data came out, the White House basically came out with a statement to say, you know what, having 2 consecutive quarters of negative GDP does not really equate to a recession. But of course, according to all the investing encyclopedias and whatnot, all the textbook that we have been learning from, they all say that that's kind of the textbook recession. But of course, the White House don't want to admit that we are in a recession. And of course, the Federal Reserve themselves would not want to admit to that as well. Okay, so because if that would be the case, then right now what they're trying to say, what the Federal Reserve is trying to say is that because due to the powerful labor market that we're actually having right now, the negative 0.9% GDP that we actually had in the previous quarter is not exactly supposed to be there, because they are actually supposed to revise it upwards. And of course, this statement basically is saying that, that we might have a revision on the GDP, and for them to kind of bring it back up to maybe like 0.1% or 0.2%. I do not know why, but they might want to add different other variables into it, such as the labor market statistic, in order for them to revise the GDP. Take it for what it's worth. I'm not sure if this is even going to be happening. This is just in the minutes, and I'm just going to be covering it as per usual. All right, so, but other than that, I think that the whole entire minutes don't really have anything that's super duper important, other than the fact that we are now projecting for a 50 basis point increment in September. So, of course, I will talk a little bit more about it. Of course, before the next FOMC meeting, I will most likely have a expectation video as always. Okay, so right now I'm just going to talk a little bit more about like my own thoughts after the minutes, because right now they're talking about a 50 basis point increment. Okay, so having a 50 basis point increment, my thoughts right now would most likely be the CPI for September. I think that's going to be one of the biggest contributor, because the September CPI is going to be happening before the FOMC meeting as a whole. Okay, before the meeting even starts. Okay, so for example, if the CPI were to come out to be again another 0%, okay, same thing. Like I said before, I think we still have 2 different risks. Well, not really 2 different risks, but 2 different outcomes. Okay, the first outcome would be that the Federal Reserve is like, that's great. That means that we have 2 consecutive 0%, aka our year over year is going to be going down. Okay, nice, cool. Okay, so they might be happy about it, but of course, like I said before, in the minutes, they would still be increasing the rates, because they need to continue to stay restrictive even if inflation were to go below 2%. That's the first outcome. The second outcome would basically be like the Federal Reserve is thinking, okay, you're still to 0%. That's not really what we're expecting. We're expecting it to be negative. Okay, we want to bring it down even more. We want at least a negative 0.5%, something of that nature. We want to bring down prices. Okay, we need to bring prices down. We cannot just keep prices as it is. Because having 0% effectively means that all prices stay the same. Okay, it means that food stay the same, gas stay the same, your apparel stay the same, your furniture stay the same, your used cars and trucks, all of those are going to stay the same. That's what 0% means. Of course, that's not exactly in literal form. What it actually means, it just means that in totality, it just contributes to 0% inflation. But having just 0% inflation is not going to be enough. Okay, because right now we need prices to go down. We of course, having the prices not continuously skyrocketing is amazing. Okay, it's a good feat on its own. But like I said before, we need it to continuously go down. Okay, if oil prices were to, for example, if oil prices were to hit $130 per barrel, for example, if the WTI announced that the per barrel is going to be $130, and afterwards every single month thereafter is a 0% increment, oil prices still skyrocketed to $130 and it still stayed stagnant. Okay, and that means that we are going to have a persisting inflation. Okay, and of course it's not continuously inflating. Okay, but we're going to have an inflation plateau, and that's going to be horrible for the market as well, because if you suddenly have like a 30% increase in oil prices and just stay there, okay, that's horrible. Okay, that's horrible, especially for energy prices. Okay, and that's why, and that's what I'm saying. Okay, 0% sounds great on paper, but if you actually go down into the nitty-gritty of the numbers, it actually doesn't really make that much sense. Okay, so like I said before, I think that the September CPI is going to make a lot of, it's going to hold a lot of weight for the FOMC, where the conversation is going to be skewing towards. Okay, so if the CPI were to come out 0%, like I said before, I think it's great. Okay, I think it's still pretty good. Okay, the worst case scenario is, of course, if we suddenly were to see like another 0.8%, 0.9%, even a 1%. Okay, if we were to see something of that nature, there's even a higher possibility where the FOMC members basically say, okay, you know what, screw the 50 basis point increment. We're just going straight to a 75 or even a 100 basis point increment. Because let's not forget that we still need to bring up the FFR rate over to 3.4%. Okay, and if inflation continues to persist even after having a 0% month over month in July, okay, it simply means that this is not working out. Okay, and if that is not working out, then you have to kind of bring in more force to bring down inflation. But let's not forget, I also talked about how this is a lagging consequence being brought into the market. Okay, and that means that in the 2 months, or well, in the 3 months where we already got the 75 basis point increment, okay, in quick succession in the past 3 months, now we kind of need to wait 3 more months. Okay, so effectively, right now it's August, so we need to wait for September, October, November. So possibly by November, okay, then maybe, only maybe, then we would kind of see everything kind of just inflect downwards. Okay, so for example, by November, if we do not see inflation kind of just drop down, by drop down I mean, like, prices actually inflect downwards. If inflation do not go down to, like, if we do not start to see like negative 1% inflation in any one of those months from October, November, and December, then there should be some worries kind of forming in our heads as well. It means that those quantitative tightening did not actually work out. Okay, and from there on out, it means that the Fed need to, 75 basis point did not really work. Maybe we need to hit with 100. Maybe we need to hit with 125 or 150. Okay, which is why people still, I don't get it. Like I watch a lot of YouTube videos about the finance space, and I read a lot of the comments from other people. Okay, and people are saying that, a pause might be coming, rate cuts might be coming. Like, we are not even near. Okay, I would assume, like, maybe the mid of 2023, maybe we can start having the conversation of a pause or a cut. But until then, I don't see it happening. I do think that we really need to bring up the FFR rate. If anything, we need to bring the FFR rate to about 4%. Okay, personally, I think we need to bring it to 4% in order for us to really bring down inflation. So that's my own take on the whole entire FOMC minutes and such. But anyway, that's all I have for the FOMC minutes. And yeah, if you enjoy this sort of video and me actually breaking down the summary of all this different economic data, okay, subscribe to my channel, give this video a like. And of course, I do upload video every Wednesday and every Saturday. And yeah, if you do enjoy my content, just stay around, and I'll see you guys in the next